In today's video, I am going to be breaking down my top 5 high dividend, or I should say higher dividend ETFs that are on the Canadian stock market. These are all very interesting ETFs, so let's get down. Let's check them out. So this first one is ZWB. And this is actually a very interesting ETF because it's a covered call. A covered call ETF is essentially an ETF that will hold stock, but also sell covered call options, which basically means that they are selling call options for the individual stocks that are inside the ETF so that they can make a little bit of money from those option premiums, which then they pay you as a dividend or as a distribution. So the average volume of this ETF is about 200,000 shares per day. Its yield is 7.5% at the point of making this video, and it's being traded at $18.15. The other thing about it is the fact that it will only sell these covered calls on Canadian banks because it will only hold Canadian bank stocks. Now the thing with this ETF, and what a lot of people will look at, is the fact that, of course, it's really fallen from its top. And I actually called this out to a couple of friends a while ago, that triple top means that we're going to be falling, and that's exactly what happened. But now, trading within a range once again. It fell below that range for a bit, now it's back up, but if this continues to, of course, stay in this range, it's currently at the bottom of its range, then it becomes actually very interesting at the level that it's at right now. This one does pay a dividend every month, and something that you should always look at is, do they increase their dividend? And yes, they do, at least recently. Now its top holdings is BMO, BNS, ZEB. Now, what is ZEB? That's actually the next ETF that we're going to talk about, but why would they hold this while they hold bank stocks? Well, the thing with ZEB is it's another BMO ETF that holds just the Canadian banks. So, in my opinion, they're holding that because why do a whole rebalancing if they don't need to when they're already doing that rebalancing in another ETF? Those stocks that they hold, BMO, BNS, and the other top 6 banks or big 6 banks, those are the ones that they're selling the options for. Now, the management fee is quite high on this one at 0.71%. Now, while most ETFs MERs are a lot lower, covered call ETFs have a higher MER because you're making a higher dividend, and of course they're putting in a ton of work doing those call options, so they want to get paid for their work, so that's why the MER is much higher. Next is ZEB, like I was mentioning. This one holds just the Canadian banks, equal weighted, and its yield is 4.4%. Now you may be wondering, well, why would I get ZEB if I'm only getting a 4.5% dividend while I could get that other ETF for a 7.5% dividend? That 3% means a lot to me. Well, if it does, and you're actually using this as income, then yes, you would want to go for that higher dividend, because with covered call ETFs, they protect you on the downside, but you're limiting your upside. While with ZEB, you would be getting essentially the bank stocks and not doing the call options, in which case your downside is going to be much bigger, but your upside is going to be much bigger as well. So what I would suggest is anytime a market goes down and anytime you think the stock market's going to go down, get into call or covered call ETFs, and that can protect you on the downside. We've seen a massive influx, and I've made videos on this channel before about how much volume was going into these covered call ETFs before this massive downturn. And now we're still seeing some pretty good volume going in and out of these ETFs. That tells me that the stock market isn't necessarily all the way down just as of yet. But it's good to have different options when it comes to stocks, but also ETFs, and understand what the stock market is doing and what each individual fund is able to do for you. The volume of this one is 1.2 million shares traded every single day. And as we can see, it's been trading in that range just like every other bank, it seems like. Now this one does pay every month as well, and it does increase its dividend just like how the banks increase its dividend as well. These dividends are coming straight from the banks, not from options. As we can see, top 6 holdings, we have big 6 banks: BMO, Bank of Nova Scotia, CIBC, National Bank, Royal Bank, and TD. All roughly in that 16 to 17% range. Now, this is not balanced every single day. This gets balanced every once in a while. I think it's every quarter, in which case these may be bigger in some cases than other holdings. And its MER is 0.28%. So if you're looking for a potential higher growth of dividend, you would want to go with this ZEB, but at the same time, that cheaper MER is also very interesting. But if you were looking for just a higher dividend, initially, let's say you're retiring this year, then that higher 7.5% might be more interesting to you. Next is VDY. Now, with this one, you are getting 4.4% dividend, 200,000 shares traded every single day. However, with this ETF, you're not just doing the banks. This is Canadian high dividend payers. Just like the banks, because most of the Canadian economy is either oil or banks, you are looking at them still trading within a range, but this one's at a higher point of the range versus the banks that are still down below. This one pays a dividend every single month as well. And when it comes to this one, do we see increases year over year? And if we look at March versus March of course, last year, we can see that it has not increased its dividend. However, if we look at February to the February of before, you can see that it has increased its dividend. That is promising. Now, its top 10 holdings is about 71% of its total assets, which means that that's a massive portion of its holdings in just 10 stocks. But the banks are top 2, and then we have BCE, which is Bell. We have, again, another bank. Royal Bank is a bank as well as TD. And then you've got some oil stocks in CNQ and Enbridge, Suncor, I think that's TransCanada. So you have different holdings. You have telecommunications, banks, and oil. That is essentially what our economy looks like in Canada. Now the MER of this one is 0.22%. Fourth ETF I'm going to talk about is the iShares S&P TSX High Dividend ETF. Very similar to the last. This is XEI. This one, however, pays a 4.9% dividend. Average volume is a little bit less at 74,000 shares traded per day. This one is now trading at the top range of where it's been currently trading, so this might be a good wait and see. But they have been increasing their dividend as well, which is what you want to see. Its top 10 holdings are again pretty interesting. We have BMO, then we have Bell, and then we have CNQ, which is oil. So we have a bank, we have telecommunications, oil again, then we have FTS, Royal Bank again, Suncor. We have TELUS, another telecommunications, and TD. We have a lot of different options in this ETF. But its top 10 holdings is only 48% of its total assets. So with this one, it's a little bit more diverse than that last ETF we were just looking at. Now the MER of this one is also 0.22%. Now you're not going to see a massive increase in your underlying asset over a massive period of time of like 12 years. You're doubling your money over a 12-year period, but you're getting a good dividend. Last but not least is BMO Canadian Dividend ETF, ZDV. This one, you're getting a yield of 4.3%, an expense ratio of 0.35, and an average volume of 63,000. It's not too bad. This one, again, is trading in a range, but it's at the top of its range once again. The banks seem to be cheap right now, in my opinion. This one has increased its dividend a year ago, but not recently. Its top 10 holdings is about 45%, and we're getting a bank, telecommunications bank, oil, and then you're getting some other, these are massive holdings as they are, right? But another bank, you're getting basically banks always in the top 10 holdings when you're looking at Canadian high dividend payers. I hope that this video has helped you and given you some information on these ETFs and, of course, some of my thoughts. Personally, I think that the banks right now, maybe not in the PE ratio side of things, are cheap, but in the fact of when you're looking at the charts versus other sectors, the banks seem to be doing in a good position to buy right now, but this is a very interesting and potentially tough time that we're going into, so keep that in mind. I personally hold a lot of bank stocks, so I may be biased, maybe because I've been buying bank stocks my entire life. So always do your own research. Never trust a random person online. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.